So welcome everybody. Welcome back to the third session. Quickly, without further ado, we're gonna go straight to. We're gonna go straight up to. Our diagnostic session, where we talked about the fact that we'll be looking into why you often lose money trading. All right, why you often lose money trading. Are we excited? Is everybody excited to be here right now? Okay, beautiful, beautiful, beautiful. If you're just joining us, we've actually had two sessions before now. The recordings will be made available in the Telegram group. And then the webinar for last week is also still available on the webinar group. Please do well to go through the entire webinar content so that you can understand all that we've treated so far. It's some fantastic value, completely free of charge. It's actually some amazingly fantastic value, completely free of charge. You didn't have to pay a dime or a penny to be here. All right. So I'm giving you utmost value, completely free of charge. All right. So having said that, now we want to look into why do people lose money trading Forex? All right. Because we already know for a fact that the market, there's about 6.6 trillion dollars available in the market per day. All right. $6.6 trillion is traded in the market. All right. So the daily volume of the foreign exchange market is about 6.6 trillion every single day. All right. So the question is, how come as a retail trader or as a small scale trader, how come I have never been able to make up to 0.001% of this money? Why is it that I'm unable to even make 0.0000001% of this in a week? All right, how come? What's wrong with me? All right, what's the issue? What's the problem? Why am I losing money trading Forex? All right, so if you would like to know, all right, you are at the right place. All right, you've come to the right place, because right here, right now, I'm going to be diagnosing, or I'm going to be showing you the tips for you to be able to arrive at a the practical diagnostic result. All right, at a practical diagnostic result. I'll be back shortly. Okay, there are people in the waiting room that need to be admitted. Okay. All right. So apologies. We're back now. Okay, I still have a couple of people in the waiting room. All right. Okay, beautiful. So now the first reason why anybody would lose money trading Forex, all right, is inexperience. All right, that's the first reason why any single person will lose money. All right, inexperience or ignorance. All right, inexperience or ignorance, which simply describes when a person does not have sufficient knowledge or sufficient experience to accurately or adequately navigate the foreign exchange market. All right. Okay, so the first reason is inexperience or ignorance. All right. The second reason, I'm still going to come into that. I'm still going to come into that. I'm still going to explain in depth, but let me just outline the points first. The second reason is indiscipline. All right. That's the second reason, indiscipline. Then the third reason is one one very popular reason why people lose money. All right. Um, and the third reason is simply um, poor mentorship. Poor mentorship. The fourth reason is poor management skills. Although let me under the fourth topic, under the fourth heading, let me talk about at this point. Um, let me talk about brokers. All right, and then inconsistency. All right, beautiful. Beautiful, 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 beautiful. All right. So if you're interested in having me explain those 5 points, let me see you drop yeah in the comment section. Just drop a yeah in the chat box quickly. Just drop a yeah in the chat section. Silas, I see you're talking about emotions. Don't worry, we'll talk about that. I'm coming. Beautiful. All right. So let's get it. Let's get started. All right. So let's explain number one. Inexperience inexperience and ignorance. All right. So when we talk about inexperience or ignorance, I saw that someone talked about emotion. Someone mentioned that emotion is the reason. I'm going to show you where emotion falls into. All right. Emotion does not is not a point on its own. Emotion is not. There is something that causes emotions when trading. All right. There's a reason why people have emotional trades. All right. So emotion by themselves are not enough, is not enough a reason to the point where we can now itemize it as a reason why people lose money trading. All right. So I'm going to show you where that falls into. All right. So inexperience or ignorance. All right. And I could categorize a whole lot of things under this. But as the name implies, inexperience or ignorance. There are so many people, for example, who are crypto investors today. All right. All right. There are so many crypto investors who are in mourning or who have been in mourning for a while now because um, majority of them or a large number of them entered into the cryptocurrency market largely based off of speculations. All right. A large number of them became crypto traders out of speculation. A large number of them came into the cryptocurrency market based on speculations. All right. They didn't have sufficient information. They didn't even have an experience of what the financial markets look like. All right. They had no idea what the financial markets look like. So they just heard people talking about buying the dip or talking about a certain commodity and then, hey, BTC, it's rising, it's rising. They are back, they are in the market. All right. I have a $4,000 I'm not doing anything with. Can I buy BTC with that? They say, yeah, all right, all right. And the market is always excited to take money from anybody. The market does not care what your background is. The market does not even ask, do you even know what you're doing? All right, because if the market asks that question, many people would not be in the market. And the market needs many people to be in the market so that those who know what they are doing in the market can make money in the market. Are you with me? So the market is structured in a way that it takes money from foolish traders to pay the wise ones. All right. And that's what gave birth to a trading strategy called the smart money concept. All right. The smart money concept is based off the premise that there in any market, there is smart money, there is foolish money. All right. So the SMC concept is the smart money concept and is one of the most expensive trading strategies out there. All right. However, it's a strategy that I have learned. I paid for it. All right, I paid for it. I've learned it. I know what it talks about. All right, but still, I choose to trade the Templars way, and that's because the Templars trading strategy is one of the best strategies anybody, I mean, anybody can come across. I came up with it. All right, it's a strategy that I created, which is why it is not as popular as the strategies you are used to, moving average, crossover, and the likes. All right, it's a strategy I came up with, and up until now, it has been kept top secret. All right, it has been kept top secret. However, it is responsible for my successes so far in the foreign exchange market. All right, and the results that my students have is proof that the Templars trading strategy is a top-notch trading strategy. It's actually something that I derived from all of my years of experience trading for investment firms. All right, I've been an analyst under about 4 different investment firms, and I've been a risk advisor for 2. All right, so I've gained sufficient experience from the markets to the point where I came up with the Templars trading strategy, and so far I've had months and months of back testing and forward testing, and I have had amazingly successful results. Like, my results have been top notch, amazing. All right, so enough of the talk about that. So when we talk about inexperience or ignorance, the market does not question your experience. All right, the market does not even care whether you're experienced or not. All that the market cares about is that, did you come with money? All right, so far you are coming with money, the market is fine to accommodate you. All right, so based on the fact that many people don't even study or research or try to find out the basic information about what the market is about. All right, with the example of the cryptocurrency crisis going on right now. Buy the dip, buy the dip. When BTC was $48,000, somebody bought the dip, not understanding that already on the daily time frame, or I think on the 4 hours time frame, there was already a head and shoulder pattern, which would have been an indication to anybody who knows what they are doing. All right, you spotted the head and shoulder pattern. I'm talking about as at 2 or 3 days ago. All right, you spotted the head and shoulder pattern on the 4 hours time frame. All right, the neckline got broken, came for a retest of the neckline again, and you are still buying the dip as at $48,000. Who sent you? All right, so but because they were hearing everybody shouting on social media, buy the dip, buy the dip, buy the dip, buy the dip. Well, congratulations to those who bought the dip. I'm glad to announce to you that BTC is around $37,000 right now, as at this morning's chart. Let me quickly confirm that. Okay, it's about 38,000 plus. It's about $38,000 right now. So if you bought the dip from 48,000, I'm happy to tell you that you've lost about $10,000. All right, but I am not one to make fun of people's misfortunes or people's ill experiences. So let's leave it at that. So inexperience or ignorance. All right, a lot of people enter the foreign exchange market probably because they saw on social media a particular forex trader who is flexing with a very nice Rolls Royce, or just purchased an Audi TT, the latest edition, or maybe they see someone with a Mercedes Maybach, and they're like, there is money in forex. You understand? And there are so many forex traders on social media who are there to oppress. All right, you see a forex trader with a Bugatti Veyron. You see one with the latest Lamborghini. You see a forex trader with a Tesla. You understand? And then you're like, oh man, this market is amazing. There's money in the market. Yes, there's money in the market, but without experience, you will not get a penny out of it. All right. If you come into the market ignorant, your money will be added to the money that those who are making money are making from the market. I don't know if you got that, but I trust that you're an adult. You should be able to understand that. All right. So then that's that about inexperience or ignorance. All right. A lot of people enter the market without even trying to know what it's about. All right. So much that many of them come and start crying foul and saying, oh, the market is a scam. Forex is a scam. It's rigged. It's manipulative and all of that. Well, congratulations to all of those. All right. So the next thing I'm going to be talking about is indiscipline. All right. Indiscipline. And under indiscipline, I'm going to be talking about 2 major things. All right. Under indiscipline, we have risk management we have money management. We have risk management, we have money management. The two of them are sincerely not the same. Are you still with me? Pardon my spelling for indiscipline. I made a typo error here. All right. Risk management and money management are sincerely, clearly not the same. All right. So let me just explain in summary. Risk management is what you do when you don't have money. All right. Money management is what you do when you have money. What does that mean? You cannot tell a person who does not have money to manage what they don't have. So money management cannot apply to a person who does not have money, which means categorically, money management is only applicable in a scenario where a person does not have money. Are you still with me? So risk management applies when you don't have money, all right? Because when you don't have money, the biggest thing you have is risk. All right, the main thing you have when you don't have money is risk. All right, the details about this is what I teach, is part of the things that I teach my students when we have our sessions together. All right, but I needed you to be able to understand this basic thing. All right, when your capital is small, what you practice is risk management. All right, when your capital is large, what you practice is money management. All right, so based off of this, that's why we have something called risk reward ratio in trading methodology. All right, under trading psychology, it's important that a student or a trader understands the risk reward ratio of every trade they take. All right, and I personally tell my students, a trade that does not offer you up to at least 1:2% and 1:2 risk reward ratio is not a trade worth taking at all. All right, if based on risk and money management, if this trade is not offering you at least 1:2 risk reward, please avoid it. All right, that's what I teach my students, and that's what I'm saying to you right now. All right, it's not worth it. What that means is, if you practice 1:2 risk reward ratio, all right, let me quickly put that here. All right, risk to reward. All right, so you see, you might have come across people who write things like 1:3 RR. All right, what that simply means is the RR is talking about 1:3 risk reward. All right, and that means for every one risk, all right, I'm expecting 3 rewards. All right, such that if my stop loss, which is SL for short, if my stop loss is 10 pips, all right, my take profit, my take profit must be at least, if I'm practicing 1:3 risk reward, it means my take profit will be 30 pips. All right. And what that means is that for every one trade that eats, for every one trade that eats TP, for every one trade that eats TP, TP is take profit. All right. For every one trade that eats TP, I have built margin for 3 SL trades. Let me explain. It means that if one of my trades eats take profit, all right, the profit I have made from that one trade that eats take profit, all right, is going to be sufficient to cushion the effect of 3 lost trades. All right, that singular trade that eats take profit is going to provide me enough margin for 3 losing trades. And I would be a fool, all right, to lose 3 trades consistently, back to back, 3 lost trades. Are you with me? So if you understood what I've explained so far, let me quickly have that in the comment section. Let me quickly have your response in the chat box that you understood what I've explained so far, please. Okay, I should recap that part. All right, talking about risk reward ratio. All right, I talked about the fact that it's simply telling you that for every stop loss measurement, all right, for every stop loss that you have, your take profit must be at least the stop loss, the distance between. Let me type that is equal to um, all right. So the number of pips, the number of pips between your entry and your stop loss is your risk. All right. So the pips between entry and TP is your reward. All right. So risk is measured as the number of pips between entry and stop loss. Reward is measured as the number of pips between your entry and your take profit. All right. So what I'm simply saying is that if you practice a risk reward of 1:3, all right, and say, for example, your stop loss on one trade is 10 pips, all right, your take profit has to be 30 pips if truly you are following a money management principle of risk reward, all right, or if you are following a risk reward principle, all right. So your take profit must be at least 30 pips if you are really following 1:3 risk reward. All right. And if you follow 1:3 risk reward, it means that for every single trade that eats take profit, all right, the profit you have made from that trade, all right, if you lose 3 trades back to back, you have not lost out of your starting capital. You have only lost the profit from that one trade that eats take profit. Is that clear now, Mr. Jerry? Do you understand that, Mr. Jeremiah, please? All right, beautiful. So when we talk about indiscipline, I'm simply saying that many people don't stay true to their risk reward principles. All right, many people, out of excitement, out of whatever it is, out of pressure, out of emotion, whatever it is, many people find it hard to stay through to their risk or money management principles. All right, I've seen people who don't have money trying to manage money, trying to practice money management, and I'm like, who sent you? Who's your mentor? All right, you're starting an account with $100 and you're trying to practice money management. Bro, you should be on strict risk management. All right. Under money management, that's where we talk about things like hedge, things like martingale. That's where we talk about things like, how do I put this now? Cushioning your trades. All right. But you can't talk about money management when all you have is risk. All right, if you have a capital less than $500 or $1,000, don't even think of money management. Always think risk management. If your starting capital or your equity is less than $500, don't even bother about money management. All right, let all of your emphasis be on risk, 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 risk. All right. If you got that, please, I need to know in the comment section. Just drop in the chat box quickly that you understood that. While I take a sip of my fluids. Thank you. I'm waiting. If you got that, just let me know. All right, beautiful. So I believe that we can move on now. We can move forward now. Beautiful. So after indiscipline, the next thing we're going to talk about is, let me move this aside. Let me move this aside. All right, so the next thing we're going to be talking about is poor mentorship. All right, so when we talk about poor mentorship, All right. What we're simply talking about, I'm going to explain this clearly. All right. I'm going to explain this clearly because it's actually one of the most, it's actually one of the very popular reasons why people lose money. All right. So I've seen people who choose mentors because they are seeing how much profit their mentors post. All right. But I need you to read what I'm writing on the screen carefully now. Okay. So what I'm simply saying is that I've seen people who choose mentors based on the fact that on social media they saw the person post, oh, today I made $10,000. Last week I made a total of $500,000. All right, and then based on the fact that the person is making money, all right, from the things they've seen, all right, they automatically assume that that person is a professional. All right. However, I have found that to be very wrong. That's a very wrong assumption. All right. And that's why I'm telling you right now that true expertise is measured in the number of peeps. All right. It's measured in the number of peeps that a person is able to catch. All right. Not in the US dollar, because I've seen people who claim to be gurus, all right, who are even mentoring other traders, who have students who charge about 300,000 naira for their courses. I know one whose course is $1,000, all right? And the way he teaches his students, I can never, for any reason in my life, based on the fact that I have a conscience, I can never teach a student like that, all right? I can't imagine telling a student to open a trade, all right, a trade on a $200 account with 0.1 lot size in 3 positions. All right, to open 3 positions with 0.1 lot size. That is already too much risk. All right, that's when we talk about, if you were my student and we're talking about risk management, all right, we would have been talking about leverage and over leveraging. But you can go and do your research on that. Go and find out what over leveraging means. That is already over leveraging. How does a person open a total position of 0.3 lot size on $200 and you are proud to call yourself that person's mentor? All right, that is already too much. So a lot of the traits that people see on social media that's bringing all of the vibe and all, whether it is demo or real account or the person has proof of withdrawal, don't automatically assume that this person is a pro. Don't automatically assume the person is an expert until you can see their charts, not their profit tab. See their charts, study it. All right, look at their chart. Where did this person enter from? How much drawdown did he have? What was his risk to reward ratio? All right, how far away was his stop loss when he entered the trade? All right, how far away was his stop loss when he entered the trade? And how close was his take profit? I personally told my students about a particular person on social media who practices a risk reward ratio of 3:1. Like his risk reward is 3:1. So his stop loss is usually his stop loss is usually 30 pips. His take profit is 10 pips. All right. So he is risking times 3 of what he's about to gain. His risk is times 3 of his expected profit. And as far as I'm concerned, that is crazy. You understand? It's like investing 300,000 naira in a deal, all right, and all you are expecting back from that deal is 30,000 naira. All right, investing 300,000 naira with someone, and then you are investing for a year, and what the person is going to pay you back at the end of the whole thing is 330,000 naira. That's not a wise investment. You understand? Because it's too much risk for too little profit. How do I risk 300,000 naira for 30,000 naira gain when I don't even have a guarantee that you will deliver on your promise? Are you with me? So when it comes to poor mentorship, I tell people, you don't know a professional because he posts profit all the time. You know a professional because it shows his charts. All right, it shows his chart. It shows you this is what I did. This is how I did it. All right. And secondly, majority of those who post their profits will never show you when they make losses. All right. Even those who show you when they make losses, they only show you to keep you quiet so that you don't suspect them. They cannot show you all the losses they make. They only show you the ones that matter, the ones that will not scare you away from them. All right. If I've shown you a chart, if I've shown you a profit of $30,000 and then I'm coming to show you a loss of $500, it is not scary enough for you to run away from my mentorship. Are you still following? Are you following my flow? But if I come and I show you a loss of $20,000 after showing you a profit of $30,000 last week, and then I'm making a loss of $20,000 this week, you will naturally be scared because it means in the past 2 weeks, all that I'm left with is now $10,000. You understand? But a lot of people don't understand these things, all right? A lot of people really do not understand these things, okay? So poor mentorship, I've seen people pay exorbitant sums of money just to learn strategies that are failing, all right? I was telling some of my students recently, I know someone who charged $1,000 simply to teach about how to use Bollinger Bands and stochastic divergence, all right? A strategy that they can learn on YouTube. I know a YouTube channel that I can refer you to go and learn about that strategy. And it charges $1,000 for that strategy simply because there is a lot of wickedness in this industry. All right. A good trader has been taught not to have emotions. And that's not just emotions with regards to the market. It also includes emotions with regards not feeling your pain when you lose money. So a good trader in quotes will not pity you for paying $1,000 for his course, even if you don't get value. All right? He doesn't care because all he cares about is money. He has been taught that way. All right? So a good trader does not care about how much they lose. The same way, when they begin to mentor you, all right, they don't care about how much you are losing right now. All right? If you paid $1,000 for a course and you got $200 worth of value, they simply don't care because they've lost more than that to the market. Are you with me? However, I know somebody is wondering, does that mean I am not a good trader? Well, Ogunkunle Adetola Freeman Tanimola is an amazing trader. However, I am a much better human being. All right? Trading is not all about my life. I am a trader, but at the same time, I am a much better human being. All right? So I will not risk my humanity on the platter of money. All right? Money is too small a reason to risk my humanity for. All right? And that's why I am never going to charge a person for something I know they will not get value for. All right? So that's enough about me. I know I said this is going to be our last session for today, but I don't feel like I've exhausted what I need to exhaust. So permit me, we're going to go for 10 minutes break right now. We're going to go for a 10 minutes or a 5 minutes break right now. We'll be back by 1:30 p.m. We'll be back by 1:30 p.m. Please ensure that you're here. I'm going to take the other two, which is talking about shady brokers, and then we're going to talk about shady brokers, and then we're going to talk about inconsistency. All right, we're going to talk about shady brokers and inconsistency in the next chart. You don't want to miss it. Trust me, you really don't want to miss it. I'm dishing out some deep, amazing value, some secrets that you will not find mentors talk about, all right? Especially not on social media or on YouTube, all right? But this is free value, and I feel like you need it. You deserve it, all right? So see you in the next session, and God bless you. In the next 5 minutes, we start.